Hello everyone, welcome back to my channel. So this video marks the end of the week number 28, this Road to 100k Realized Returns Challenge. This was a very busy week because we had a whole host of companies announcing their earnings, and even though things went on overall positively for the major indexes, the S&P 500 and the Nasdaq, they finished up for the week, slightly up. In our case, things have gone mixed because Pfizer announced its earnings, and even though the earnings were quite positive, they exceeded their expectations. And I can show you here, for example, let's see, so it's here, Pfizer earnings, and as you can see right here, the earnings for the year 2024, so the APS, the earnings per share, were exceeded by, I would say, a large margin, and this was a very positive surprise. Despite this, the market still made some bad impression about the fact that the company will still may still have some issues in terms of keeping these numbers up, as some of the products that they sell may not have the demand they are currently have, and so because of that, the demand may subside in the future. Also, weighing on the sentiment for Pfizer is the fact that Robert RFK Jr., Robert F. Kennedy Jr., is also, I think it was also nominated, or at least is in a very good position to be appointed as Secretary of Health, I believe, in President Trump administration. And so, because of his stance as an anti-COVID-19 vaccine, so basically is not exactly a promoter of the vaccine. These outcomes are seen in a bad light when it comes to the value, to the quote, or to the prospects of Pfizer moving forward. And so because of that, after earnings, the stock did come down, and so it finished negatively for the week, and showing the graph here. And as a result of that, it ended up hitting, and you can see right here, even though it went up after the earnings, but then as earnings were digested, basically the stock came down and ended up hitting our strike price of 26 for the put options we have sold. And as you can see, it was right here at the $26, and so it finished the week at the 25.73, below the strike, and so we were forced to buy 2,000 shares of Pfizer. Now, this has the upside of having lowered our cost basis, because now the cost base is at 26.42, and that means that now we are in a position of, instead of selling calls with a strike price of 28.5, we can now start to sell them at 26.50 rather, and which now enables us to see if we can. Of course, this makes it much more likely that we will be selling calls continuously on our shares, and this is what we needed to basically make it much more likely that we will be able to sell our entire holding in the near future, when the stock makes some sort of rebound. And also, looking at the chart here, you can see that, and pulling over to the 1 year, you can see that this level right here, which is 26.50 around here, this is something that was attained, that even exceeded over the course of this year, and we are pretty much in the beginning of the year, so I'm pretty optimistic that we will be able to sell these shares pretty soon, assuming the stock rebounds and everything comes back to the normal market sentiment. And so yeah, basically this is it. In the meantime, we also our the calls that we sold on QQQ also fell away because we didn't hit the strike of 536. I've already input our calls. I already input the results of our covered calls in here, so they expire worthless, as you can see right here. So we had a very meager return, and just as it happened with the calls that I sold earlier in the week, and now I have it in here. So basically this is a market loss, so it is not relevant. This 27 cents is basically the difference between the strike and the stock price at the moment, which is, as you can see, between 25.73 and 26. The difference is 27 cents, which makes no difference because this is a mark-to-market value. It will change when the markets open on Monday, but nonetheless this is just an irrelevant number. And of course our calls that we sold with a strike price of 28.50 also fell away without value, and so we kept the premium for ourselves, and we were able to get a slightly better return. And for the time being, we'll have to wait and see what happens with these 2,400 shares that we now have on Pfizer. Also, it's important to see here, and this is the statement, the activity statement up to date, the most recent one, and looking at the current realized values that we have in here. So this is where it starts, and as you can see here, we now have a realized value of $27,545.58. So just a very, very minor progress towards our target, towards our goal. But the way the markets are going, it's basically there's not much we can do about it. And looking at here at our performance chart, we keep a return rate of 16.94%, which is not bad. And looking here at the relative performance and using as a benchmarks the S&P 500, the Dow Jones, and also the Nasdaq 100, you can see right here in our performance chart that we are outperforming the S&P 500 and the Dow Jones, but we are still lagging the Nasdaq at this particular moment in time. And so basically this is the way it goes sometimes. And basically given our current situation in terms of the trades we did and our current cost basis for the QQQ, which has a very, very large portion of our portfolio, we are very dependent on how the Nasdaq performs, and until the Nasdaq recovers, it's difficult for us to get much more value or get a better return out of it. So basically this is it, and we'll reconvene at the beginning of the next week, and to start the week number 29 in this challenge. In the meantime, feel free to leave your comments below. And by the way, one of the things that I wanted to show you also as well is the fact that we managed to dodge a very, very big bullet. I'm not sure if you have been covering this or have been accompanying this development, but as you can see here with Ford Motor Company, which was also heavily penalized by the news about the tariffs, and the earnings were not good, and basically the stock now is quoted at $9.25. So basically we managed to exit the stock at exactly the right time, and we basically dodged a big problem here, which could have been much more serious. So this was a very good move, and we'll hope that we'll be able to do the same with Pfizer. We're not going to wait until we make some sizable profit out of it. As soon as we hit, in case we have options call options sold and we hit the strike, of course we will be glad to sell them. But if the time comes and the value of a little bit above 26.42 is hit, and we don't have any calls ongoing, so the shares are available to be sold immediately, we will sell the shares, because we cannot afford to have another market slump, and basically we are no longer in the profit again, and so we have to wait again until it comes back up. So yeah, this is the plan for the next few days or weeks, depending on well the market will perform. And as I said, yeah, feel free to leave your comments and any questions you have in the comment section below, or feel free also to send me a DM on LinkedIn. And as always, yeah, feel free to like the video and subscribe to the channel, and we will reconvene next Monday to start the week number 29, and I'll see you there.